All right. Good morning again, guys. I hope everybody's doing well. Today is Tuesday, right? Day of our procurement strategy course. Today we're going to discuss the last topic, on supply chain finance. If you remember, we had until today 3 meetings to approach supply chain finance. First, we discussed, of course, always with an eye on procurement. In the first meeting, we discussed the basics on supply chain finance, discussing how it impacts the balance sheet and so on. Second class, we discussed component vendor finance. Last class, which was the third one, we've talked on securitization or factoring. And today we're gonna close this series on supply chain finance, discussing real estate funds, or in a good and clear Portuguese, fundos de investimento imobiliário, and its impacts on logistics and procurement. Okay, so this is the topic for today. I will make the friendly remark now on the schedule for the next classes. Okay, from next Tuesday onwards, it's gonna be up to you to take care of the presentation during the classes. So what I mean is that you guys will be in charge of presenting the cases that have been assigned to each of you through the 4 groups I've divided this question. Okay, so bear in mind that next week we start doing this. And bear in mind, guys, that again, just a friendly reminder, as I've talked about this in the past. For the groups that will present, it's just necessary that one person send through Dropbox the presentation, the PowerPoint. Okay, it's not required anything else from the group that is presenting in that day. For example, group 1 next week will present the first case. The people that is encompassed by this group just need to send me the PowerPoint through the Dropbox. One person, not everybody. All the rest of the class, all the other students need to send me a individual summary on the reading, on the case that it's going to be presented in the day. For example, again, next week, if I'm not wrong, we're going to discuss Apple's case, if I'm not wrong. Group that will present will send the PowerPoint, and all the rest of the students will send me individual reports bringing the main insights on that case. Okay, also sent through the same Dropbox that the group will send the PowerPoint. We're gonna have just one Dropbox per class. Okay, the ones that's not presenting, the ones that are not presenting will send the report, the summary on the case, and the group that is presenting, just one individual will send the PowerPoint. Okay. Any comment? Any doubt? Nope. All right. Let's get started then. As I said, today, the material is already available for you guys. As I said, today we're going to discuss one subject that for me, particularly speaking, is something very amazing and useful in both logistics, supply chain management, and and financing as well. So it's a very nice link between these two fields of science, financing and supply chain management, which is the real estate funds. The name of the class today is the role of supply chain finance in the non-current asset investment. This is the name of the class, okay? In other words, we're gonna discuss a vehicle, a tool that we have in the financial markets in Brazil, by the way, very strong, that allows firms to have logistics assets while they don't have them as properties. They don't have them in their balance sheet. They are not owners of the structure. We're gonna try to understand this better. Of course, you as business students already heard about this, but we're gonna go in detail on this topic. So the role of supply chain finance in the non-current assets investments. We have a 4-topic agenda for today. We're gonna make the concept, or gonna express the concept of the real estate funds, real estate investment funds. We're gonna see how real estate funds impact balance sheet, or real estate investment funds, if you like. Okay. What are the risks involved with real estate funds operations, and the major KPIs that we need to consider when we are from a investor point of view, when we are assessing some real estate investment funds possibilities. Well, the main idea, the first idea actually on real estate investment funds is that this is another tool among the ones we have for the firm to raise cash. This is another important tool for the firms to raise cash, to increase liquidity, okay? As we've seen, we notice that debt is one of the most traditional ways to the firm to raise money, to raise cash. Equity is the other very traditional way. Securitization, as we also seen, it's an important tool to raise cash through selling the account receivables. And now we're gonna see the sale of assets as another important tool for the firms to raise liquidity. Okay, but what is the concept of real estate investment fund? If we follow Mendes' concept, real estate investment fund is the financial asset. The real estate investment fund is a financial asset that allow anyone to invest in an easy and smart way in the real estate industry, even if the investor is short of cash. Real estate investment fund is, at the end of the day, a financial asset, like a firm's stock in the stock market, like a credit bond or whatever. This is another type of financial asset. But this is very particular, because I mean, I would say the biggest characteristic, the most important characteristics of the real estate investment fund is that those investments might be backed by real estate. I mean, real in the more in the straighter way of the meaning of the word. It can be backed by real estate, by houses, by logistics infrastructure, by malls, whatever. And how does it work in a general way? We have here a asset management, okay? Itaú BBA Asset Management, Bradesco BBI Asset Management, XP Asset Management, BTG Asset Management. Remark that those asset managements are not the banks. They are business units inside the bank. Those examples that I'm giving to you. For example, the former economy minister of Temer's government, forgot the name now, I remember, he is CEO of BTG Asset Management. He's not CEO of BTG. BTG's CEO is Salute, but he is the CEO of the BTG's Asset Management, a business unit inside BTG. Okay, so the real estate investment funds are managed by asset management firms, organizations. Okay, and how does it work? The real estate investment funds, first, they create what a word that is very common in this market. They create a thesis, a thesis. They create a thesis. They defend that they can collect money from investors to invest in some types of real estate, and that investment will provide to the investors standard and long-term dividends. So they create what I say, a thesis. We have several theses in this type of market. We have the real estate funds, real estate investment funds that are based on shopping malls. We have real estate investment funds that are based in offices, lajes corporativas. We have real estate investment funds that are based on logistics. By the way, increasing day by day. We have real estate investment funds that are based on paper, on credit bonds coming from real estate industry. So we have several different theses. We have real estate investment funds also appearing with important highlights based on agricultural logistic infrastructure. So we have these models increasing day by day. And they, as soon as they have these theses, basically a bunch of people, I mean, a group of people, as soon as they develop the thesis, they approach asset managers and present that thesis. Well, if the asset management organization likes that thesis, they bring that group of people home and give them the support to them to develop the idea. It starts with an idea, with a thesis, and it can be 3, 4, 5 people with a good and consistent idea. Well, as soon as the real estate investment fund is inside the asset management organization, they prepare themselves to make the initial public offering, the IPO. So they have the real estate investment fund prepared. They have the assets that will back the real estate investment fund identified. They can thus make the IPO. They make the IPO in the stock markets as any other type of firm do. They go to B3 and they make the IPO and they start to be quoted. They start to be traded at B3, at B3. So they make the IPO. Investors, they buy real estate investment funds quotas. This cash goes to the real estate investment fund. With this cash, real estate investment funds originate assets. They buy or they build assets. With which type of assets? Depends on the thesis that is behind the real estate investment fund. So those assets, as soon as they are originated, they are leased to firms. That in turn start to pay for the lease, monthly rates for the lease. This monthly rate is discounted of costs that the real estate investment fund have, is discounted of the income of the administrators, and the dividends are paid in a monthly basis to the investors. This is the idea behind the real estate investment fund. Okay. We have, guys, here actually, before talking on this, here we have some examples of firms, I mean some logos. All of them, they are lessees of assets owned by real estate investment funds. It's not random. I didn't put this in a randomized way. They are indeed lessees of real estate owned by real estate investment funds. Okay. They don't have the assets. They use the assets. What are the types in general, in a general manner? What are the types of real estate investment funds? They may be made of tijolo. I didn't want to make the literal translation here, but we could name these as made of brick. Okay, the language is very common for Brazilian real estate investment industry. So made by tijolo. As the name says, a real estate investment fund backed by or made on bricks concept is a real estate investment fund that have as assets real estate assets like corporate offices, logistics infrastructure, malls, among others. Paper, as the name says, are the real estate investment funds that are backed by credit bonds linked to real estate industry, such as certificados de recebíveis imobiliários, letras de crédito imobiliárias, or even other fundos de investimento imobiliário, or real estate investment funds. And of course, we have the hybrid model in which a real estate investment fund is made by real estate assets and financial assets linked to real estate industry. But, well, this is very nice. This is very good. I understood that those guys here have, as investor or as investors, a option to get standard and fixed or almost fixed monthly income by investing in this type of financial assets. But what's the advantage for those guys here, for the firms that lease assets from the real estate investment fund? What's the advantage for those guys? The advantage is the same as we've seen for the other supply chain finance solutions prior to this class. Always, the target is to increase liquidity. So as soon as a firm decides to lease a asset instead of having this asset, basically what this firm is doing is that becoming liquid something that is illiquid. They are becoming property, plant, and equipment, the famous PP&E in English, into cash and equivalents. They are becoming liquid. But look, they are becoming liquid by reducing the level of PP&E, but at the same time, they are not leaving on the table. They are not giving up. They are not giving up of having the asset. Well, the firm needs that asset. The firm needs a logistics infrastructure, a warehouse, a office in São Paulo, whatever. They need that asset, but they don't need to own that asset. They don't need to be the owner that they don't need to be the owner of that asset. So they rent the asset. This is the advantage for the firm. And the advantage is here in the balance sheet. The advantage is here again in the balance sheet. Look, there are basically two types of operations in which a firm can lease an asset from a real estate investment fund. A firm can lease a real estate from a real estate investment fund by having a sale and leaseback operation. With the sale and leaseback operation, the firm has a property, plant, or equipment. They have this is in their balance sheet as PP&E. Well, this firm needs to have these facilities. They cannot simply give up of this. They need for their operation to have that infrastructure. On the other hand, they don't want to be held in their cash by having this. They want to release cash. They need cash to pay the bills. So they can do a sale and leaseback operation with a real estate fund where the firm sells the asset to the real estate investment fund, and the real estate investment fund immediately lease it back to the firm. So as soon as the firm sells the asset to the real estate investment fund, the firm will get cash due to this sale operation. Well, if the operation stopped here, the firm will get the money, but wouldn't get the asset. They simply would be selling the asset, and then they could not use the asset again. But then we have the lease back. The real estate investment fund make the lease back to the firm immediately after the sale in a long-term contract, like 10, 15, 12 years, 20 years. Very, very traditional operation here in Brazil for the real estate investment fund that we have, the most traditional. Firms found a way to reduce the dependence of equity and of debt by selling their assets without giving up of their assets. We also have another type of origination operation between firm and real estate investment fund, which have the name of built to suit operation, less common, but also that also may happen in this market. What is a built to suit operation, or BTL. Remark when you are traveling using your car through the roads, through the metropolitan regions of the biggest capitals in Brazil. Eventually, you're gonna see that we have, large logistics infrastructure, and we have there, hey, we do sale and lease back, or they simply have a space with no construction. We do build to suit. What is build to suit? Build to suit is the operation in which this firm needs a new property, plant, or equipment. They need to increase their operation. They need to increase their logistics capacity. They need to invest in fixed assets. But they don't want to bring cash from here to here. They don't want that. They want to have the facility, but they don't want to freeze cash. Well, what they can do, they can find a real estate investment fund and discuss the possibility of a build to suit operation in which the real estate investment fund will construct the facility the way the firm wants it. With the characteristics that the firm wishes for that facility. It's going to be a tailor-made facility, tailor-made to the firm. And as soon as the construction is done, the real estate fund will simply make the lease agreement with the firm, long-term agreement, where the firm leases the facility. The difference between sale and lease back and build to suit is that sale and lease back is about a asset that already exists, while build to suit is about a asset that's going to be constructed, that's going to be built, customized to the requiring firm. One way or another, those two operations increase liquidity of the firm. Okay? What are the risks, guys, involved with real estate investment fund operations? We have some risks when you are as investor investing in a real estate investment fund. Here we have six of them. Yeah, Mateus is saying here vacancy, which I named here, Mateus, as idle capacity, but you're right, vacancy. Okay, the first one. What does it mean? Idle capacity, or as Mateus says, vacancy. If I'm gonna invest in a real estate investment fund, I need to make sure that, this real estate investment fund has a bunch of assets, let's say 20 assets, 20 different warehouses spread over São Paulo state. Okay, I need to make sure that this real estate investment fund has a low level of idle capacity, or as Mateus said, vacancy. Why? Because if I have a high idle capacity, probably the real estate investment fund will face troubles to pay the dividends to the investors, because if there is a idle capacity, if not all the assets are leased to someone, means that the real estate investment fund is not receiving the lease payments, because basically it has idle capacity. So if the real estate is not receiving, if the real estate is not receiving lease payments, there is a risk that the real estate investment fund is not capable to pay dividends to the investors until the assets are fully leased. So idle capacity is one important metric that we need to consider when we are investing in a real estate investment fund. Liquidity is another very important characteristic that we need to consider when we are investing in a real estate investment fund. I mean, you can buy a real estate investment fund quota in the home broker as you buy a firm's stock. It's the same thing. You just type the ticker and you buy a number of quotas. What we need to consider is that the liquidity, the number of trades that happens around a real estate investment fund quota in the stock market is quite low in comparison with firms, traditional firms' stock. For example, you can buy or sell Petro 4 when you want. You will always find liquidity. Market is always buying and selling Petrobras stocks. It's not the same thing for real estate investment fund quotas. You need to bear in mind, you need to make the assessment of the level of liquidity of the real estate investment fund that you are targeting. Why this is important? Because eventually you want to leave the position, you want to sell your position, and eventually you will not find market to sell this position. So very, very important to consider. Remark that although the buy and sell happens in the stock market as the stock market, traditional stock market, it has a different characteristics from firms' stocks that are traded in the stock market because of liquidity. Basically, what I am saying is that this should be faced as a mid or long-term investment. I mean, you buy a number of quotas from a real estate investment fund, aiming to leave the money there for a long period, just getting the dividends. Other important points to consider is the interest rates. Why this is so important, the interest rate? The interest rate, guys, is important. When I say interest rate, I'm basically saying, or I'm referring to the economy-based rate, Selic. This is important because, I mean, as soon as the interest rate goes up, Selic goes up, fixed income solutions or investments get part of the money that is in the variable income investments, including real estate investment funds. I mean, why would I get the risk of a real estate investment fund to get, I mean, 0.5% per month dividend yield, 6% per year, while a investment in any public bond would pay me, let's imagine, I mean, 10% per year, fixed, flat. So as soon as the interest rates, Selic interest rate goes up, fixed income becomes more interesting and starts to compete with variable income investment options. We're seeing, right? We're seeing a smooth increase in the Brazilian base interest rate. Let's see how it's gonna move on in the following months. Risk of taxation is another important risk to bear in mind. Today, the dividends that are paid to the investors, the monthly dividends that are paid to investors are free of tax, are free of income tax. It might change if the government is with hope in its neck. May be possible that the government starts to tax the yields coming from real estate investment funds. Today is not like this. Government has a special interest in this type of investment structure because this is a straightforward cash flow from investors that save money to the firms that need to invest in infrastructure. So at the end of the day, government is getting out of the role of the main responsible for investing in infrastructure. So what government does to make this environment more friendly is to take out the taxation, the income tax from the dividend yields, but it might change. It's basically politics, might change. Risk of non-payment, quite linked to idle capacity. So linked to idle capacity, but also linked to the credit profile of the lessees. So we need to make sure that the real estate investment fund has chosen good lessees to partner with. I mean, if I see one real estate investment fund with Volkswagen, with Embraer, with Grupo Pão de Açúcar, with Magalu, with Banco do Brasil, I might be Leroy Merlin, I might be BRF, I might be comfortable because I know that I am the owner of a portion of a number of assets, and my lessee is those very strong firms. So as soon as you decrease the quality of the lessees, you might eventually increase the non-payment risk. And lastly, but not less important, market risk. As I said, those real estate investment fund quotas are traded in the stock market. So the prices go up and down on a daily basis. It's not that the variation is not that high as a firm's stock, but there is a variation that we need to consider. Any doubts or comments, guys, up to here? No? Remark that real estate investment fund is the financial link between operations and supply chain management and financing and finance. It's very interesting because you collect money from investors using very sophisticated investment solutions, but at the end of the day, we are just making available cash to the firms to have access to infrastructure. Okay. I mentioned some risks in the prior slide, and here I mentioned to you some important real estate investment fund KPIs. Okay, we mentioned liquidity, we mentioned idle capacity, but we mentioned indirectly lessees through the risk of non-payment. But let's consider other important KPIs that we need to bear in mind when we decide to invest in a real estate investment fund. First, the industry in which that real estate investment fund is based on. For example, shopping malls today, real estate investment funds that are focused on constructing and leasing the space of a shopping mall to several retailers. Those guys are suffering today for the reasons that we are seeing in our current life. Shopping malls are closed for more than 1 year, or they open and close. So the retailers that have the lessees that have stores in the shopping malls, they are not paying, or they are renegotiating the monthly lease payment with the real estate investment funds. Therefore, the real estate investment funds are facing trouble to pay the dividends in a monthly basis to the investors. So industry is very important. Industry is very, very important. Which is the industry? What's the industry in which the real estate investment fund is investing investors' money? Dividend yield is also very important. I mean, dividend yield and yield both are the same metrics, but I mean, they are different metrics, of course, but they indicate the same thing, which is the capacity of the real estate investment fund to pay dividends. So, of course, the higher is the dividend yield, or the total yield that the real estate investment fund pays, the better is the real estate investment fund. Net worth, or patrimônio líquido, I mean, the amount of assets in cash converted in money, the amount of assets that real estate investment fund has. The biggest is the real estate investment fund. The biggest is the number of assets, the biggest is the number of lessees, the biggest is the operation, and then the pulverization of the risk over the real estate investment fund. If the net worth is very small, means that the real estate investment fund is small, and eventually the risk is fully concentrated in one location or in a small number of lessees. One of the most important is price over net worth. I mean, if you get the price that is being quoted in B3 and divided this by the price of the quote, the price per quota, sorry, the net worth per quota, you're gonna find a relation. If the price that is being quoted in B3 is higher than the net worth per quota, means that asset, that quota, the price of that quota in that moment is expensive. I mean, the value of that quota in that moment is more expensive than the real value of the assets. If this relation is lower than 1, so if the price is smaller than the net worth per quota, means that the price that asset is being quoted in that moment is below the price of the net worth. So eventually, it's a good investment. You are buying cheap. You're buying cheap the asset with potential to increase. Idle capacity, as we mentioned, number of assets, which is very important, linked to net worth. So the biggest is the number of assets. The more more we have, the bigger is the number of assets. Means that we have a higher level of risk spread over those assets. Asset localization, very, very important. I mean, asset localization means liquidity of the asset. I mean, if I have a asset that is badly located in a place that nobody wants, as soon as that lessee leaves, I'm gonna face huge troubles to lease that asset again because nobody wants. And the opposite is true. If that asset is well located, I will always have the opportunity to lease again to someone else, to someone of high credit quality else. And of course, the quality of the lessee. Well, how can we find those KPIs? How can we have access to those KPIs? You can go to the monthly reports of the funds that you are targeting, or you can use specialized websites like Funds Explorer. Let's open here XPlog monthly report, just to have an idea. Look, that's the behavior of the real estate investment fund is pretty much the same as the procedures is pretty much the same as a public quoted firm. I mean, uma companhia de capital aberto. They release results, they have balance sheet, audited balance sheet, etc., etc., etc. So let's see here. Monthly report March. There you are. Here we have the monthly report on XP LG 11, XPLG 11. Okay, that brings all the details of the real estate investment fund here, the behavior of results per quota and so on. But what I want to show you here is this stuff here. Investment per type of asset. So, XPLG 11 has, from the total amount of their investment, 23% in real estate related papers. They have 1% investment in other types of real estate investment funds and 76% invested in real estate. So it is a hybrid real estate investment fund, but highly backed by real estate investments. Here we have the distribution per industry. So among the total lessees, we have 36% coming from retailing industry. We have 24% which are pure spec, someone that rents the asset to lease to someone else. 11% from construction material like Leroy Merlin, Telha Norte, and others. 6% from the food and beverage industry, 5% from logistics, and 18% from others. Here, the name of the firms: Via Varejo, Leroy Merlin, Grupo Pão de Açúcar, Renner, Cislog Peruski, which is probably speculative, Supermarket Dia, Panasonic, Unilever, others. Speculative, Cajamar, which is also here. So here we have a X-ray of the real estate investment fund. Very, very amazing, very nice. Here we have the way the contracts are adjusted year over year, the index that are used to adjust the monthly rate of the contract. And here, what I want to show you is the geography of the assets, well spread, right? We have here in Pernambuco 28%, close to the Suape Sport, very special region, as Pernambuco, as Recife region, is one of the key logistics hub for the north of the country, given the geographic location. And Suape is one of the most important ports in the north and northeast region of Brazil. So having assets here is always key. Minas Gerais, I don't need to say the importance of the state. Rio de Janeiro as well. São Paulo, which concentrates 51% of the assets. Santa Catarina and Rio Grande do Sul. And here, if we go below, we see details of the contracts per lessee, the places where they are leasing the asset, the constructed area, and so on. Very, very good. Okay. Here is one example on how you can collect those informations. Here you have in the presentation, if you want to explore better or deeper, you can open also real estate investment fund, Vinci Logística, Briscoe, and so on. But here, guys, you can find a consolidated report. Okay, you can go here in ranking of the real estate investment funds and find all the information on those KPIs I showed you in a consolidated format. I mean, having a list of all the funds and the updated KPIs for each of them. Let's see XP LG 11, XPLG 11, as we've seen the report, XPLG 11. XPLG 11. Let's see. If you open here, you're gonna have access to details on this fund, okay? But I wanted to check the numbers in that list here. I don't want to leave this list. So XPLG 11, XPLG 11. Let's see. Look, guys. Let me just XPLG 11. Sector, logistics. Current price, 114 per quota. Daily liquidity, 68 million reais per day is the total amount that is traded on this financial asset. So you can compare with the other ones. dividend 60 cents per quota. Dividend yield 50.52% monthly. It's a monthly rate. Accumulated dividend yield. Here, I want to show you net worth. XPLG is in that line here, 3 billion reais, 3 billion reais, which is a very good net worth, by the way. VPA, the value of the net worth per quota, 110 reais per quota. P over VPA, P over VPA, so current price over net worth price per quota, 1.03%, means that this quota today is traded at a bit higher level than the amount of the real value of the assets. It's not neither expensive nor cheap. It's being traded around the real price, the real value of the assets. And lastly, the one that I wanted to show you is financial vacancy, but physical vacancy or idle capacity, which is 8.2%. 82% idle capacity. So here you have access to a consolidated access to the data in a consolidated format. Very useful for you that want to understand in a general way the performance of and the features of each real estate investment fund against the others. Okay. All right. Here, guys, to finish our class today, I have recorded a video. It is in Portuguese because I also offer this course in a deeper way to this class specifically, actually, to the master students. So here you have a 5 minutes video if you are curious to see why a investment fund quota is less liquid than a firm's stock. Here I compare one real estate investment quota liquidity with Petrobras stock in the home broker, Rico's home broker. And here I wanted to show you is the evolution of the real estate investment fund market. Look, this is quite interesting. Look, guys, what I wanted to show you here is this graph here. This graph here. Look, in 2009, we had just 12,000 investors in real estate investment fund. Remark the evolution. We have a very steady evolution up to 2016, 2017, and then whoop, we increased from, 10 times from 121,000 investors in 2017 to 1,300,000 investors in May 2021. If you make the comparison of these graphs with Selic behavior graph, you're gonna see that Selic is that way. So this is basically people looking for higher yields in a more or less safe investment options. This is the effect of Selic decrease more than anything else. So today we have 1.3 million people or million investors. Sorry, we have let me just erase here. We have 1.308 investors, which among of them 1.300 1,202,000 people, investors, being individuals. Institutional investors like family offices or, other funds or whatever, 1,000, and banks, 37 investors. So this is what we're talking about. Imagine what's the cash inflow that is flowing from 1.3 million investors to the supply chain. This is basically investments that finance directly supply chains. So this is why, for me, this is, so amazing. And this is Brazilian, this is pure Brazilian. Okay. By the way, we have capital markets, I would say, a very sophisticated capital markets. We are not behind. Of course, you have United States with a highly developed financial and capital market, of course, but we are not in a bad position in terms of sophistication. We have several good options that help firms, that help supply chains. Okay. My friends, this is what I wanted to present you today. Okay. We have still time. I will make the presence check or call, and I release you soon. For the ones that will leave the classroom just after the name is being called by me, I wish you a very nice week. For the ones that will wait, I will say goodbye when I finish the call. Just a minute. There we are. André Frangipani.
Here, Professor.
Arthur.
I'm here.
Bruna. Bruno Carpinelli.
I'm here.
Bruno Henrique da Cunha. Camila Freitas.
I'm here.
Carolina.
Hi, Professor.
Hi, Carolina.
Hello?
Hello, Carolina.
Okay.
No problem. Cristiano.
I'm here.
Diego.
Opa, bem, professor?
Opa, tudo certo, Diego, você?
Também.
Maravilha. Fernando.
Here, Professor.
Gabriel.
Here.
Gustavo. Hector. No. Isabela. Jenny. Juliana.
Here, Professor.
Lucas Lichand.
Hello, Professor.
Hello, Lucas. Lucas Botino.
Here.
Maria de Carvalho Sena Fernandes. Maria de Carvalho Sena Fernandes. Maria Eugênia.
Here.
Maria Luísa.
Here.
Marina.
Hi, Professor. I'm here.
Hey, Marina. Mário.
Hi. Hi, Daniel.
Hey, Mário. Matheus is there. Matheus is there. Matheus Guedes. Matheus Guedes.
Here, Professor. Sorry.
No problem. Rafael.
Here.
Renan.
Hi, Professor.
Hey, Renan. Roberto. Roberto. Victor. Victor.
Aqui, professor.
Beleza. And William. William? No. Okay, folks. Wish you all a very, very great week. And see you next week, next Tuesday, with group presentation. Good luck for the group first one. And any doubt, just send me an email. Okay. Bye bye. Take care.
Thank you, Professor.
Professor.
Bye.
Thank you.
Thank you. Bye.
Bye bye, guys.
Bye. Thank you.
Hey, Professor. Sorry I didn't answer when you called my name. I had to pick up the phone really quickly.
No problem. Let me just take your absence out here. No problem.
Thank you.
No problem.
See you, Daniel. Thanks for the class.
Thank you, Mario. Bye bye.
Bye.